Okay, this is a case study video on how we're using time and price. I've just entered the trade and actually posted it in the members area here as well. And that members area post was on gold. This is Wednesday, all right, so the 18th of June. With the trading hours, you can see the market going up. And this is the pre-news setup here. And just before the news, 7 minutes to the news, I actually posted that whole setup, and I actually, had just done it. Okay, so 7 minutes before. So how are we going to know if this is going to work out for us or not? Well, first of all, we had a calculation that Tuesday was a swing day for gold, and then we had the swing hours for Wednesday. So yesterday we calculated it as a swing day, and yesterday we actually traded towards the upside every time the market came down. And today we want to follow that up, and these were the trading hours that we need to look out for, as you can see here. And if things go in our direction, we should go in that way. Now this was 245, okay, and that's your 240 there, sorry, 240, not 245, and this is your 345. Now remember, the 345 is after the news, right? So what I want to do is take a position with the 245 setup like before the news, because I'm expecting it to go up. Now obviously here I entered a little late because I had a telephone call and the kids are on holiday, so this is why I got a lot of background noise here in the background with the kids playing on the third floor when I'm working. Now here, as you can see, with that the market went up. Now I've got a really tight stop loss, I've got a cover, and the other target is all the way back up there because I want to see gold going up to 3,500, in fact to 3,515, and we'll see how that goes. Okay, that was the whole idea yesterday, it's the whole idea today as well. I want to cover the trade and take the rest of the trade up. So if this goes in my direction, we should be okay covering the trade. If not though, as you can see, I've got a really tight stop loss here, just a matter of $5. All right, so it's not a huge thing. Why? Because if it doesn't go in my direction in the hour, I don't want to be in that trade. Okay, and that 345 hour here has already gone. I am now at 4 o'clock. Okay, this is the 4 o'clock bar. If I turn this into a 5-minute chart, let's see. You can also check the PST indicator here to see how that's going. And if it doesn't go in our direction, okay, we're going to obviously get out of the trade with a very small loss. Okay, but other than that, I'm not taking any risks, and I don't have to, because if my timing is right, we should go in that direction. If I'm wrong, I'm going to wait for the next hours that are going to happen, and they're going to happen at 5:25 to 5:45, and then I've got another one at 7, and if we find direction there, we should be targeting 10:30. Okay, so if it goes pear-shaped, I don't want to muck around because it can go all the way into 10:30 if it goes against me. So obviously you don't want to be doing that. So now we're managing the trade not with just time, but price and time together. So we've got two things happening. Okay, now this is a 5-minute chart, as you can see. Now some of you are using the PST indicator. Obviously at the trading hours, it's good to get in if you're at a place where the market is kind of in your favor. For example, here the line would have been like this, okay, and if it matched your trading hours, you could like go in on the line as well. That gives you precision pricing, right? And then if the market goes in my direction, I immediately on the 5-minute chart, I see where the resistance is. That's 66, which is 3,392, so which is going to be just above the weekly pivot here. So we should stick our heads up onto the opening price here, the white line. Okay, these pricing levels are important. The high of yesterday, low of yesterday, close of yesterday, open of today. All right, so these lines are obviously important for us because we can do intraday trading and get in and out quickly. Okay, so if this is working in my favor, then we should be going. Now as the market goes up, you can move your stop forward. In fact, I moved the stop forward. If you compare this picture here, okay, you'll see that the stop loss was a bit lower and I've just put it under that little bar there, in fact just on that bar there, which is the one that you can see here. Okay, so we don't want to be taking big risks. There's no need to. Okay, there's absolutely just no need to take that big risk if you know the trading hours and you know the swing day, and if it's going to go in your direction, highly likely that you're going to win that trade, and highly likely we will cover the trade. And in fact, if I move the stop loss higher, you can see I've got $120 risk here. I can now do this. I can move this closer because I've got $120 risk. I want to cover that trade on the first position, and on the second position, there you go, 123. So I can cover the position, and then the second position is a risk-free trade. I can just let it ride. And despite the fact that we've got news coming out today with the FOMC and the Fed interest rate decision, I don't really particularly care, because if it finds direction, it should go in my direction until 10 o'clock. And if my direction is wrong, we don't want to be there. All right, so this is why timing and pricing is minimum risk and maximum profit. And if things go in my favor, even if I don't wait till 3,500 but get out at 3,420, let's say, I'm still going to be having a really good risk return ratio here. If I wait till 3,500, you can see it's like 2,280 bucks here. That's already like pretty much quite a bit. Okay, so we're like 1 to 10, in fact more, 1 to 20. All right, because I got 1,000, I got $120 risk with respect to that, which I do want to push. Why? Because first of all, I've got the red line there, 63. That's 3,470 there. All right, and the blue line is my LCL1, 3,449. So I've got room to go up into that zone if it's a swing day going in my favor. Okay, and that 3,500 is the high that it did previously. So knowing yesterday was a swing day, I'm okay to trade at the trading hours in the direction of that bias. Despite the fact that news was coming out, I entered the position before the news so that we're not, rushing the trade. No need to rush the trade because we know the trading hours. Okay, and this is the trading hour, and if it goes in our direction, fine. If it doesn't, I don't want to be keeping that position open, because if that trading hour is wrong, it will go below. All right, so minimum risk, maximum return, and you can keep managing your trade according to the 5-minute, 15-minute. On the 15-minute as well, if I go to the 15-minute chart, you will see we bounced off the blue line right there, and that blue line is our pricing model. See how it bounced off? Okay, 53.61, 3,385. Okay, so if I want to measure that trade nicely, that bounced off at 3,385, as you can see here. So the 15-minute chart also gives you, the 5-minute chart also gives you, the 1-hour chart, whatever time frame you want to use, you can get in at the right price at the right time. Now if the market bounced off from there, I can now even push this stop loss even further up, and that's the low of New York pre-trade session. I can put it just below there and keep pushing it up, because I'm now following it with the PST. And if this PST works out, I've got a target at LCL1, which is 3,399. Okay, now if I go according to the 15-minute chart, once I cover the trade, okay, the rest, like I said, is a free trade. Or as you can see, I brought the risk now down to 87 bucks, but I don't want to, I'm not going to reduce that, because if it wants to go in my direction, it should go. Okay, so what I can actually do, I can actually move this up. I've got 90, and if I do 180 here, okay, if I cover the trade here, now I've covered both of them. Okay, why? Because if that target LCL1 is 3,399, 3,399 is right up there. So if I get there, okay, by the time I get there, that's going to be more profit. It's going to be right to the top of the channel. Before we get to the top, I'll be taking profit here, and it will cover both trades. So I would have taken 1-to-1 profit on one of the trades, and the other one is like, yo, you know, it's like 1-to-2 risk return on the first trade, on the first position, and the second position will just follow it through in our direction. It's also helpful, obviously, when I know next week's swing days as well, all right, because I got next week's swing days also already calculated, all right, so I know where that's headed as well. So knowing all that is obviously for us good information and good trading. That way you can trade relaxed. Have a good one.